Hello, I'm back providing another update on my Robinhood account. Is August 9th, 2021, about 3:07 p.m. And I've changed my account quite a bit since my last video. I had that AMD debit spread that really catapulted my account to about the $50,000 mark. Put a little more money in, put like a couple thousand in. So right now my account's sitting at $55,449. On the week, it is up $6,625. On the month, it is flat around negative 346. Over the 3-month period, it is up $23,000, 654.86, 74%. And on the year, is up $11,727. So you can see this is kind of the amount I've put in, around $43,000 of my own money to generate about $55,449. As you can see, the way Robinhood calculates it out, I still haven't got the same returns I did through February, and that's kind of my goal to end the year, is to get to the same level when my account kind of crashed. And I've made all them some mistakes, so I'm moving on past that. And I decided that the best way to really grow an account is to have maybe a more long-term approach and use fundamental analysis and find a stock that's really, really strong for the coming year and put your money in that stock with a long-term leap option. And that's exactly what I did with Western Digital. So I bought the $65 call options on Western Digital. I bought 36 contracts that cost $13.40. The break-even point is $78.40, and long-term, if this goes up to doubles, which I bought it around when it was about $65 a share, it's now trading around $67.82 a share. I give it till the beginning of 2023 for my leap option to expire, and if it can double to around, let's say, $135 a share, being my $65 strike price, we'd have a $70 difference. I have 36 options at $100. So I would be worth $252,000. So those 36 contracts would increase from $48,000 to $252,000 if this stock were to double in the next year and a half. And that's kind of the power of leap options. You get kind of almost a higher than 2-to-1 leverage, but yet you don't get the immediate theta decay you get on short-term options. And I will go over the reason why I bought the Western Digital leap options and why I think the stock could potentially double and get my account over $100,000. That's what I'm hoping for. Right now, you see their market cap's about $23.5 billion. Price to earning ratio is about 25.88. 353. Anyway, the dividends are they're not active, I believe. I don't think they're paying out a dividend right now. But basically, I'm going to go over what Western Digital is. Western Digital makes hard drives. We could read this little statement that's on Robinhood. Western Digital engages in development, manufacture, market, and sale of data storage devices and solutions. It operates with client devices, data center devices, solutions, and client solutions, mobile, desktop, gaming, digital video hard drives, solid state hard drives, embedded products, and wafers. The data center devices and solution category covers performance enterprise hard drives, enterprise SSDs, data center software, system solutions. So they make like servers where you could store stuff. Client categories offer removable products, hard drive content solutions, flash content solutions. They also own SanDisk. If you ever had a digital camera or like a GoPro or a camcorder, the little hard the little disk drives, the little flash memories you put in it. SanDisk is owned by Western Digital. So the reason why I decided to go with Western Digital is because they were struggling. They were struggling in the past. Their PE ratio within the last quarter, before this last quarter, was about 55, and they were on a down year, but yet the demand has increased dramatically for them. And I'm going to try to pull up the chart real quick. See here, there's the bar chart for the last 6 months, 9 months. They have been up this year, but over the last 5 years, they had a peak where there was a lot more demand, and the pandemic, they got crushed. And you can see on their income statements where they were losing money the last 2 years, and before they were making half $1 billion or so in after all their income. But their quarterly projections have them moving at a forward PE of about 7. So I'm pulling up SAC. So right now their forward PE is about 6.78. So if you look at their earnings per share, I listened to this call. Last time they were estimated to have 1.49 per share earnings, but a week ago they got 2.16 per share because of the new demand for these HD drives, and they revised their next quarter to be around 2.50 earnings per share, and I think the whole year about 9 to 10. So if you do the quick math right here, if they get around 9 to 10 earnings per share, that puts them at a P ratio of about 6.7, and their historic P ratio has been about 14, lowest 14, and historically it traded around, I think, 50. So they've always had a high trailing PE ratio. And if you just take the industry as a whole, saying 15 to 20 for a technology-based company, that puts them to where their stock can potentially double or triple in the next year if they could keep meeting these earning calls demands. And that's kind of where I've come in and estimated that, yes, this next year is going to be very good for them, and their PE ratio is going to drop to about 7. So their stock either will be undervalued and they'll start to buy it back from the money they're making, or investors will step in and see it's undervalued and push that price to earning ratio back up to about a 15 to 20 range, potentially doubling the value of the stock. You can see their estimate for next year, financial year, is 8.89, and then the next year behind that is 9.44. So you can see that they're slowly growing, and this guidance has actually been pushed up. Their next quarter, the guy on the call gave a 2.05 to 2.5 range. So this ratio is actually going to be higher based on what they said in their call. And also there is the Chia coin. Chia coin is a new type of cryptocurrency that uses hard drives to kind of store the currency and mine it, I guess. I don't know exactly how it works, but Chia coin has caused Chia coin hard drive mining. Let's just look this up. There'll be people that can explain it better than I am, but it's basically using your hard drive to mine cryptocurrency, and the advantage of that is it takes a lot less power than, say, running a graphics processor. And this has made storage-based companies and data-based companies hit a new level of demand. Last quarter, they attribute $100 million in revenue from Western Digital to Chia coin, and it could possibly even grow more. I mean, they couldn't meet the demand of their hard drives. They're 18 terabyte hard drives, And it's crazy because as cryptocurrency rebounds and becomes more valuable again, and they get scrutinized for basically consuming way too much power, that some of these alternative energy coins, as we want to call them, they may increase the demands for the hard drives for the next year or 2 years or whenever this fad lays out. But even without this, they still have that earnings per share projected at 9, giving them, that 7 to 8 PE ratio range, making this a pretty good value stock. See, Zach's got them as a 2 and an A in value stock and a B in growth and an F in momentum, because basically they've been pretty stagnant. So their next earning date will be October 27th. So that's something I will turn into that conference call. But yeah, Zach's has them good, and Western Digital, and the other one will be Seagate Technologies. Those two hard drive companies are something you may want to look for, and that's kind of why I put the leap option on it. I will give it at least 6 months to make its move before I even consider cashing it in or whatever. But yeah, that's where my account is, and that's why I believe Western Digital. You see, I've got 53,006.64K of equity in them. I've done some little trades. I'm experimenting with some debit spreads, some calendar spreads, but this is nothing significant to the total amount of count. This is for gaining my own trade knowledge and experience. So Western Digital is where I went, and hopefully in a year, my account will be worth more than 100K, and that will give me options to grow my account even more and put on more trades and, take on a long-term leap, but at the same time grow it and start doing more of these daily trades or weekly trades or momentum trades, or learn some of these techniques. But yes, that's basically where my account is now, basically direction I'm keeping it at, and I will update you more, and I will also put on some of the value stocks I've found that also have a lot of potential to grow and double. And as I get more money, I might put some more in these value stocks that I've found, and some of these beaten down stocks, give them more room to run. I know one thing I have done is, I know Fiverr and Pinterest both lost 25% of their market cap after their earnings, so I've put on a calendar spread between November this year and January next year at a strike price of about 20-25% from where they were, so that way it can grow into that area, and I could potentially cash it out for double what it's worth. See, I have an average cost of $452. I've already put an order to cash it out around $900 when it gets there. I did the same thing for Pinterest, put on a calendar spread at a strike price of about $75, so it's trading right now at about 58. So the front end option will decay until it gets into the money, and hopefully it will go up slowly, give time for the back end option to increase in value. See, Fiverr's already skyrocketed $180 a share, so as long as it just stays close or near $200, this front end option will decay, which help pay for this back end option, and this back end option will retain more of its value as it gets closer to the expiration. Then this front end option will decay, so this will decay faster than this, and hopefully that difference will be big enough to double my initial value. And it's kind of the theory of calendar spreads. You give it room to run up, but not buy it so close to the strike price with time that it runs up way past it, and the front end option becomes way more valuable than the back end option, and you get pretty much a sign before you get a chance to sell it. Just something I'm experimenting with, but I'll keep an eye on that. I'll kind of try to hone this system, get it profitable, and I'll go from there.